Hi, welcome to Trackstar Weekly. I'm Kristen Duffy, and today we're going to take a look at our bespoke Trackstar data and find the trends driving both institutional and retail investors. Let's jump straight into it and take a look at ETFs. Now, typically you would assume that at a period of change in the market, Wall Street would distinguish itself from retail and be getting ahead of the curve. Much has been made of the great rotation from growth into value stocks, but when we actually look at the data, there are a couple of interesting observations. The first is that in terms of the most viewed ETFs, Wall Street and Main Street are in lockstep, and the second is focus. The top three tickets are SPY, QQQ, and XLK, with the first covering large-cap growth equities and the latter technology stocks, ergo growth stocks. We should keep in mind that when markets are volatile, users may be researching for a variety of reasons, bullish or bearish. From then on, there are similar themes between audiences, with growing interest in value-focused ETFs like IWN and shorting large-cap growth equities like SQQQ. Moving to individual stocks, we see a similar trend of professional and retail investors looking at the same top stocks. Wall Street investors had Apple as their top stock, followed by Tesla, Sorrento Pharmacies, and Inovio Pharma. Main Street traders, however, favored the media-savvy Tesla for their top spot. From there, retail favored two vaccine-linked firms, Vaxart and Kodak, perhaps driven by President Trump's headlines about an imminent vaccine. Wall Street, however, focused on Amazon and iBio, a microcap stock from Delaware that we've covered recently. iBio is interesting because it focuses on developing vaccines and therapeutic proteins based on its plant-based iBio launch platform technology. We know President Trump is keen on therapeutic solutions, so maybe Wall Street is reading in between the lines on this one. Moving to OTC stocks, we do have a real divergence in what's being researched. Wall Street's top OTC stocks were Cytodyne, a pharmaceutical preparation firm, Ammo Inc., an ordnance and accessories firm, and Northwest Bio, another pharmaceutical preparation firm. Retail investors, however, focused on Galaxy Next Generation, a motion picture services company, Optech International, a pharmaceutical preparation firm, and Virus International, a groceries firm. What's notable when looking through the full lists is that institutional investors are heavily focused on vaccine-linked firms, while retail are more reflective of a pivot toward value-linked stocks. Finishing off with a look at currencies, we can see Bitcoin, Eurodollar, and sterling are most closely followed by institutional investors and retail, which is understandable due to recent moves. From there, Wall Street started to focus on dollar-yen, a long-standing safe haven pair, while retail focused on dollar-CAD, perhaps in relation to the recent move in oil. That suggests that professional traders may smell blood in the water and are positioning themselves accordingly. That's all we have time for today, but be sure to do your own due diligence before making any investment decisions.